That's a big thing this week. We have seen some solid movements. It's actually been quite a positive week across the board, but very low trading volume. I think Monday was the 6th lowest volume day on the S&P 500 year to date. So very low volume this week. It's traditionally Thanksgiving week is a very low volume trading week, but across the board, some positivity. There's still been a fair bit happening this week. The Federal Reserve came out and gave their meeting minutes, which is essentially their overview, their wrap on their meeting for the month, which they give at the end of said month. And it was actually really quite positive. Markets reacted very positively to that. There's been a lot of positive, relief through that. And what they basically came out and said is that the majority of Fed officials believe they should soon moderate the pace of rate increases. So it's given investors a lot more hope that next month will be 50 basis points, not 75, which we've seen for consecutive months now, 75 basis points. So now they've come out and said they're leaning towards 50 next month, which is very positive. So futures markets are now pricing in a 75% chance of a 50 basis point hike. So a very positive way. That was midweek, but middle to the end of this week's been very positive.
One of the things I've always said, and one of the things I probably quite like about finance, is that it is very fast-paced and everything is always changing. Because
always, every day.
Let's rewind back to a year ago, and they were talking no interest rate hikes in the US until 2024.
In Australia as well.
Yeah. Now they're talking about maybe slowing down, down in 2020.
I remember looking at the disparity even earlier in the year. So I went from from December last year to January this year. Yeah, you're right. December it was nothing till 2024. Early January, we won't raise rates till 2023, and then late 2022, and then that's when they've already come before that. They really came mid 2022. So it was changes very quickly. I guess the only thing from this is that looks quite positive on face value. But Jerome Powell actually said during his post-meeting press conference, he said,
chill down, chill out.
He said that rates will probably ultimately go higher than officials' September forecast. So that means the peak rate might go a little bit higher, but they are
What's the peak rate estimate that they're saying?
At the moment, it depends on the institution you look at, but across the board, sitting between 5 and 6%. So they're at 4 at the moment, so it'll be interesting to see how they go.
We've got maybe another 3 hikes, maybe another 4 hikes.
I think the big thing at the moment is they have December, which is 13th and 14th of December. They have their meeting, and then they have obviously a bit of time off. And I think the big thing that people need to realise is that there's a pretty big lag between interest rate hikes and the impact they actually have on the economy. There's usually a few months lag there.